We got some big news for Boeing stock investors as the company's CFO gave insights into the company's free cash flow expectations and the restrictions on building and manufacturing its 737 MAX airplane. I'll go through those details, what it means for Boeing stock investors, and I'll update my recommendation on Boeing stock. I'll share with you my proprietary discounted cash flow valuation model that shows you what I feel is a fair price or fair value for Boeing stock. And then I'll look at valuation, measuring it on a forward price to earnings basis. And then I'll share with you the cash flow from operations over a trailing 12-month period. I'll combine all of that and update the recommendation. So let's get started.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Boeing stock investors had grown increasingly concerned about the company's cash flow. You can see a chart here. Over a decade, it's trailing 12-month cash flow from operations. That big turnaround here is when its troubles started. Manufacturing delays, manufacturing restrictions as a result of performance restrictions, the company having trouble with its planes, having disasters that customers experienced, and all of that has led to regulators clamping down on Boeing and forcing upon it improvements. So the cash flow had turned significantly negative $12 billion, in fact, in the most recent trailing 12-month period. But today, on March 19th, 2025, the CFO, Brian West, attended a conference, an investor conference, where he talked about the company's cash flow expectations. And the CFO said that Boeing's cash burn rate is easing. So you see how it's declining here, trending downward. What he's saying now is that this is easing, so it's going to slow down. And hopefully, after it slows down, the next part is increasing back, returning to positive. He also confirmed that the production of the 737 MAX is on track to achieve 38 planes per month, despite their previous supply chain constraints and regulatory limitations. They also noted that in March, they expect their deliveries to align with February's figures, which Boeing delivered 44 aircraft, including 32 of the 737 models. So these were good developments for Boeing stock investors, and you're seeing the stock price react. It increased 6% today on the back of this news. So that's the good sign. The bad sign is you're seeing it on the screen here. The cash flow from operations, hugely negative for Boeing as the company faced troubles. But if we zoom out, Boeing's business is a phenomenal business. It has basically one competitor in Airbus, and they both have backlogs of a decade or more with hundreds of billions of dollars in orders. So they have got customer demand going out a decade or more. And so that's the good thing about the business is relatively few competitors, customer demand exceeding supply, way exceeding supply, right? So far exceeding supply that it's going to take a decade or more for Boeing to catch up. And it may never catch up because as it goes along, manufacturing planes and delivering on orders that were placed years ago, new orders are coming in, and Boeing is backlogging those orders all the way back over a decade. So that's the good side of the business. It becomes an execution story. It needs to execute and build these planes to order and to do so efficiently and effectively, and the business will boom. The trouble is that it hasn't been able to do that over the recent few years. Now, if you look at the returns on investor capital, at one point, it exceeded 80%, which is phenomenal levels, right? The only company right now that I see that I'm following that's over 80% is NVIDIA, which is over 100% returns on investor capital. So this is a very high ROIC business. The core of the business, strong competitive advantages, strong cash flow from operations that come in when customers make an order, and then of course they get payment when they complete and fulfill an order. It's just a really strong business if they're able to execute, just manufacture to order without problems, without difficulties, keep costs under control, and the business will boom. Now, when I calculated my discounted cash flow valuation model for Boeing, I found its intrinsic value to be worth $141 per share. The current market price after today's increases is $171. So according to my discounted cash flow valuation, Boeing stock looks a little bit overvalued. It looks a little bit overvalued. Investors didn't sell off the stock as much as would happen with any other company if they didn't have these kinds of backlogs and these kinds of competitive environment. The stock price would have sold off more so than Boeing stock price did amid their challenges and their difficulties. The business model, the strong competitive advantages, the competitive dynamics held firm the business's valuation throughout all of these difficulties, throughout these huge declines in cash flow from operations. Similarly, when I look at the forward price to earnings ratio, it's trading at a forward PE of 40, which it's relatively rich. And of course, Boeing, the stock deserves a premium valuation because it is a premium business. But right now, they're going through so much difficulty and they're trying to fix these things. And investors, we're not sure they're going to be able to fix these things. I'm not convinced that they're going to get back on track and they're not going to have more mistakes over the near term as they hastily try to fix these problems with this big cash outflow. They don't want to continue losing $12 billion annually in their business operations. So they're moving quickly and prudently to try and fix these issues. So the news today, definitely good news for Boeing stock investors. However, it's not enough for me to upgrade the stock. I've had Boeing stock rated as a hold, and I'm updating that recommendation today, reiterating that I think the stock is still a hold while they work through these issues. Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've created a book, I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.